It's Wednesday, April 27th, and you are watching Kitco News. My guest today joins me from Hong Kong. He's Puru Saxena, the founder of Puru Saxena Wealth Management. Puru, you've gone on the record recently stating that silver will experience a serious pullback. We're now in a medium-term correction phase. Your thoughts on the white metal?
Well, we don't have any positions in silver at present because silver, as you know, has had a huge run-up in price over the last 9 or 10 months or so. It's gone from about $17 to almost 50, which was the high recorded in 1980. So we think with after this such a parabolic up move and failed test of those all-time highs, the probability is now for a medium-term correction. Obviously, we don't know how low the price is going to go yet. Perhaps it's going to be a high consolidation, or perhaps we are going to plunge back down to about the low 30s. Is anybody's guess, but I wouldn't be long silver here.
So, Puru, for investors looking to get into silver, are we waiting for that major correction to happen?
Anytime, the best time to buy during any bull market is to buy during the periodic corrections. And I know a lot of silver bugs out there who are saying that this time is different, but these are the four most expensive words in the English dictionary. It is never different. And there is no supply shortage of silver. There is a lot of hoarding of silver going on. And it's only a question of price. If prices go high enough, that silver will come out of the coffers and be available as supply in the market. So there is no physical shortage of silver, and speculators and investors should be wary of that.
Puru, you touched on a very sensitive topic of the silver shortage. Obviously, you feel there is no silver supply issue.
Absolutely. You know, every time when you have a speculative mania, the tagline changes. In the year 2000, it was about the internet. People were saying that this time is different because the internet is going to change the world. And then you had the housing boom in the US where people said house prices never go down on a nationwide basis. And now you've got this boom in commodities and silver. And this is just one aspect of this bull market. The promoters of silver who stand to benefit from promoting silver are spreading these rumors. However, there has been plenty of silver mined in the world, and a lot of the silver is being held by the ETFs. So as I said, it's a question of price. If prices go high enough, that silver may be available on the market. So this idea that silver has suddenly become scarce is ridiculous.
All right, Puru, let's switch topics. A big Fed meeting conclusion happening today in the US. What do you think will be the outcome? Will we see rising interest rates anytime soon?
Well, I think they're not going to raise rates anytime soon because if you look at the dual mandate, which Bernanke keeps talking about, is unemployment, and the other one is inflation. Well, according to Mr. Bernanke, there is no inflation in the US, which is completely absurd. Anybody who knows and lives in the real world knows that there is inflation of about 10 to 15%, not only in the US, but all over the world. But at least according to the official statistics, there is no inflation. And as far as the unemployment is concerned, the unemployment rate is still very high. If you look at the U6 unemployment rate, which is a more accurate reflection of unemployment in the US, as close to 15 or 16%. So still about 25 million Americans are out of work. So under these circumstances, I don't think the Fed is going to start raising rates or even start talking about raising rates. However, I do think what they're going to say is that they're going to keep recycling the proceeds of the mortgage-backed securities in treasury purchases. So what they're going to try and do is do a soft extension of the quantitative easing. I don't think they're going to go cold turkey, and they're going to just have to gradually see how the market takes it. But I don't really think, Daniela, that this is the end of quantitative easing. I believe there's going to be quantitative easing 3, and then 4, and then 5, because the US economy cannot take higher interest rates. It will bankrupt millions of Americans. And it will also bankrupt the US government because we've done some figures. With the federal debt now in the US at $14.3 trillion, 1 percentage point increase in the interest rate increases the annual tax burden by about $142 billion annually. So if interest rates go from 0 to 5%, you're talking about $700 billion in interest payments annually extra, which is certainly something that the US government cannot afford right now.
All right, Puru, so just to conclude, we know you're not in silver these days, so where are you placing your money?
Well, the biggest allocation that we have for the capital which we manage on behalf of investors is currently in energy. We've got roughly 30% of our money invested in energy stocks because I think that the world's oil production is about to peak now anytime within the next 2 to 3 years, and it is going to enter an irreversible decline, also known as peak oil. And the global demand for energy is still rising. It is now hitting a new record at about 89.4 million barrels a day. Production is about 88 and a half. So already production is struggling to keep up with rising demand. And I think that the price of oil is going to skyrocket over the next 2 to 3 years and cause the next recession. But I think over the next 2 to 3 years, investors are going to do very well in energy. Recently, we have also increased our exposure to gold. We are making asymmetrical bets on the direction of gold, which is going to make us a lot of money if the price of gold continues to trend higher for the next 2 to 3 years, which we think is likely. Then our leveraged bets on gold are going to do incredibly well. I think investors looking for returns should focus on buying the physical metal rather than speculating in the mining stocks, because if you see what's happened over the last year or so, physical bullion has done a lot better than the majority of the mining companies. If you happen to own, say, a junior exploration company and they got lucky, of course you made a lot of money, but the large cap companies haven't really done anything. And if you look at the strength of the physical bullion versus the mining stocks, you will note that whenever there is a sell-off, physical gold prices don't go down at all, maybe 0.5% or maybe 1% at most, whereas the mining stocks get whacked by 4 or 5%. So I think in terms of a risk-reward scenario, physical gold bullion looks very attractive, and usually when the market refuses to break down, that is a sign of strength, and this is where we allocate money.
So Puru Saxena liking physical gold these days. Puru, thank you for joining us.
My pleasure. Thank you.
And thank you for watching Kitco News. We'll see you next time.